Hi, Larry Berman here, and here's what's on my radar this week, or should I say, under the radar. It's obviously a very, very challenging week for all financial markets. Wasn't too many places to hide this week, and as we've been concerned for a while now about large cap tech, we finally started to see some pain as the NASDAQ broke and closed below its 200-day average. The S&P broke and closed below its 200-day average. The interesting thing about option expiry days, apparently, and the number I heard today, apparently about a third of all outstanding options expired today. And so all these hedges around the options had to be liquidated. And so that's going to mean some undue selling pressure. So very often and historically, we would see key inflection days on an option expiry like this. We are seeing an inversion in the volatility curve. It's not severe at this point by any stretch, and the absolute level of volatility is not extreme, but it is in the range where I would expect a bit of an oversold bounce, especially this week going into large cap tech earnings. Now, where we can see clear risks are on names like Peloton, where they say something that's even remotely negative, although that stock's been in distribution for quite a while, and it was a classic meme COVID stock. But Netflix was another one. You should not see a multi-$100 billion company fall 20% in one day. I don't care what the issue is. Forward-looking subscriber growth down that much, that tells you how fragile the multiple is in an environment where that growth element, financial conditions, the Fed is pulling back. So we should continue to see failed rallies. We'll get rallies. I expect one this coming week as a technical oversold bounce, but it's a bounce and it's sell the rips now. And for a while in those names, we're not buying the dips yet. When you see that capitulation, when the big volume spikes and nobody wants a piece of these anymore, that's when the next real tradable bottom will be in. And I don't expect that till at least around midpoint this year. So that's really what I'm thinking about this week. And I saw a great webinar that my good friend David Rosenberg hosted this week with former deputy head of the Fed, Bill Dudley. And, he talked about candidly having the seat at the Fed table and kind of what their talk is about. And the 5% pullback, US stocks are down 8 this year, broad market globally is down 5. They don't care. Financial conditions don't start to matter until we're down 15, 20 kind of percent. So think the mistake Powell made in his narrative after the December 2018 FOMC, when he said the balance sheet was on autopilot. So if we get that narrative out of the Fed this week, that could wash the markets. I think Powell's learned that. I think they walk it back a little bit, but they got to talk tough on inflation. And we should get a bounce this week with big cap tech earnings. So that's what I'm thinking here, but it's a rally to fade. Keep that ARK ETF in your on your radar. $50 to $60. When I look at the individual names there on where I would pick up a CRISPR and a Teladoc and some of those other, what I think are real good long-term plays, I think Tesla still could get cut in half from here, but those names where I would want to buy them and try to calculate what that ETF should trade at falls into that 50 to 60 range. Also technically looks pretty reasonable. We went out Friday at 71 and change, I think. So keep that on your radar as well. Bull and bear pick of the week. Well, what are you bullish on here? I covered some of my hedges on Friday, just typical of the short-term capitulation and bounce, but I'm going to throw those hedges on. We get a 4 or 5% bounce led by the Qs, and I think those hedges come back on. I'd be very shocked if you could see a meaningful rally at this point beyond where we broke down from. We're unlikely to see new highs this year. If all goes well and the Fed does, well, maybe later in the year, fourth quarter kind of thing, where we make new highs, but it really increasingly looking to me like the highs may be in for the year, certainly for the next few quarters. So it's sell the rips as the cautionary tale for the next couple of quarters. And you do want to start looking at some of these companies that have been beaten up silly, but we're not quite there yet. Have a great week, everyone.